All right, good afternoon, everyone. I'm Carol Burnett with the Mississippi Low-Income Child Care Initiative. Welcome to a webinar that we're hosting today to share information with you as a child care small business about resources that you might qualify for that have been made available during this coronavirus emergency. We have a guest today, Necaise, who is an accountant on the Gulf Coast, and he is helping small businesses navigate these resources. And he's agreed to share information with us today so that you can find out what you need to know to be able to take advantage of these resources. Ty, we have over 100 participants who are on the webinar so far today. Thank you so much for being with us to share information that's going to be really important for them to know. So I'm going to turn it over to you.
Thank you, Carol. I appreciate it, and I'm sorry I'm not able to be on video with you guys. This is I have a desktop set up in my office, and I'm not used to the Zoom setting just yet, but we'll get there. But so for the most part, there is a ton of confusion around what's going on with all the programs that have been passed over the last week. It feels like this has been going on months, but in reality, some of these major programs have really only been in existence for less than 2 weeks. Actually, I think all of them have been enacted in less than 2 weeks. So there's kind of a whole lot happening, and there's really a lot of confusion surrounding it. And to be honest with you, the programs are changing daily. We are assisting all of our clients with the SBA programs and all the credits that we're going to talk about, and every day we're getting updates on this. So my advice to all of you in the beginning is, definitely to go to your SBA.gov and your IRS.gov websites, because both of them have special pages for the COVID-19 crisis that you can review daily, and they're posting information nonstop. So for the most part, I picked out what I thought would be the most relevant to child care centers and really all small businesses in the country, because this is applicable to everyone at this time, and temporarily, until the crisis is over, or if they continue it, or whatever they decide to do with it. But for now, most of these programs are available effective now and through the end of the year, and I'll update you on that as we go. So go into the first slide, and like I said, I picked out the major programs to discuss. So the first one that really was effective date-wise, that was effective first for small businesses and child care centers, would be the Employee Retention Credit. So although this is in effect as of 3/12/2020, what this is basically saying is what they're trying to do is pass legislation that will enable businesses and child care centers to continue paying employees. What they do not want to have happen is for people to lose their job, and if they do, for it to be on a temporary basis. So effective 3/12/2020, if you were under mandate, which a lot of you were, if you were under health department mandate, or however that went, if you're under a stay-at-home order or anything to that effect, where you're under a mandate where you had to close, or you had symptoms, you had employees that had symptoms and testing and things along that line, the Employee Retention Credit is available for 50% of what you pay your employees, up to $10,000 in wages per employee. So if say on 3/13 or whatever, you were shut down and you continue to pay your employees, when you file your quarterly tax form that you normally file when you're filing your quarterly payroll tax return, there will be an option starting in the second quarter for you to get reimbursement 100% up to $5,000 in credit. So it's $10,000 in wages, $5,000 in credit per employee. So you pay an employee, say you pay them, $500 or whatever, you pay them $2,000 or $1,000 over 2 weeks. When you file that payroll return, you will be able to say, hey, we paid this employee $1,000, and the government is going to fully refund $500 of that credit to you. Now, there's some criteria around that. Like I said, there has to be government mandates, things along that line. There is more information about this available on irs.gov. There's a whole frequently asked question section that you can review on it. So, but it is fully refundable. So, say you pay $1,000 in wages to your employee, but you only paid in say $200 in taxes. The $500 credit is still fully refundable to you. So you'll get the $200 back plus an additional refund of $300. So it will help you get kind of some cash flow. I mean, it's not as immediate. Initially, they were saying it was going to be immediate cash flow, but you're not going to get it in the form of a refund until after the second quarter, which would be when you file in July. One thing to keep in mind, though, is that if you are continuing to pay, or if you did pay, you can short your deposits now for the second quarter in order to get kind of that immediate cash flow back. And I can explain that more in detail later in the Q&A if necessary. But just kind of going through the bullet points here, you know, up to $5,000 in credit or $10,000 in wages. So you submit $10,000 in wages for a refund, you can get up to $5,000 worth of refund for paying out $10,000 of wages. You will file it on your Form 941. So for all of you that have payroll, or you have CPAs or accountants, bookkeepers that do your payroll, they'll all be familiar with that. Every quarter you file a 941 return, so there will be a refund line on that. There's another credit we're going to talk about in a minute. You can take this credit along with the second credit that we're going to talk about, which is a sick leave credit, basically, that was passed. So you can take both credits. The key is that if you were paying employees after from 3/12 or later up until April the 1st, you can take this initial credit and then you can switch over to the Families First credit, which we're going to talk about in a couple of slides. The one caveat to this is we're going to get into the PPP program in a minute, which is really what's all over the news right now, but you cannot double dip on any of this that we're talking about. So keep in mind, if you're applying for a credit or a loan or anything to that effect to cover the wages that are for 3/12 ongoing or 3/12 through April 1st or whatever you decide, you cannot apply for the PPP program and the same credit. So you can't double dip the same program, basically. So we can move on to the next slide from here.
And Ty,
So
Ty, as you're moving on to the next slide, let me just remind everyone who's watching, if you have questions, at the bottom of your screen, if you're watching on a laptop, on the bottom of your screen, you'll see a Q&A spot. You can click on the Q&A and type in a question. If you're on a smartphone, if you touch your screen, you should see the Q&A option pop up. But you can type in questions at any point along the way, and when Ty is done with his presentation, we're going to get to the questions. Okay. Thanks, Ty.
Okay, so the next program that, and this is another big one that's been kind of all over the news, what's what we call the EIDL program through the SBA. So basically, which stands for Economic Injury Disaster Loans. This is the advanced option. So there is a little confusion still surrounding this. I'll be honest with you. It's like I said, the information's coming out daily. The Department of Labor, the SBA, and the IRS are still saying, hey, we got more coming, but they have not released more guidance on it. But for the most part, what happened was when the initial Families First Act kind of came to be, they wanted to provide funding which was supposed to be faster, a way for you to get money in your hands sooner. Now, I don't know of anyone that's actually gotten this money yet, so it's not happening near as fast as what we were hoping. But what they did was they went with the normal economic injury disaster loan process. There was an application you can, so say, there was a flood and there was a disaster area or something like that the president would declare. they would have economic injury disaster loans for that area. So they just kind of jumped on that bandwagon and said, okay, we're just gonna go nationwide with this program. And then they did a simplified version and added a $10,000 upfront advance on your loan. And then the advance is actually eligible to be turned into a grant. So in theory, what's supposed to happen is if you go to the covid19relief.sba.gov, which is right there on the page for you, if you go to that website, there's an EIDL application there. You can fill out the application, and on the application it says, do you want to be considered for the $10,000 advance on your loan? So you click yes, you go through the process. There's 4 or 5 pages. It's pretty simple to do. I think the most complicated thing you'll need to know is what your gross receipts were and what your cost of goods sold were. So you would need to contact your accountant or whomever to ask about that. But so in theory, what was supposed to happen is you can get the $10,000 advance, and that advance would roll in to the next program that we're going to talk about, the next loan/advance program. But it's possibly 100% forgivable, meaning that it would just turn into a grant, and it would be a non-taxable grant, which is also unusual. So if you get the $10,000 and it turns out that you comply with the requirements and they forgive it, you do not have to claim that $10,000 in your income, which is a pretty big deal. And the way that you would get it forgiven would be the same criteria for what we're going to talk about for the PPP program, which is if you use it to pay for payroll, rent, lease, interest on your mortgage payments, and utilities. So if you're able to show that you paid the $10,000 on those items, then you could possibly get that forgiven. Worst case scenario, you apply for the $10,000 and it's not forgiven. Then the interest rates that you're looking at are 3.75 for a for-profit business and around 2.75 for a nonprofit entity. So either way, it's really kind of not a bad deal. That link is still available to date as of right now. You can actually go to covid19relief.sba.gov and you can apply for this now. So if you want kind of the simplified way of applying for money, this really would kind of be the way for you to go. The only caution that I would have for you would be you want to know if you're going to have to repay the money or not. So if you do this, I would apply for the money. When you get it in, I would keep a ledger of what you're spending the money on and try to focus on the qualified items, which are payroll, meaning people that actually get a W-2. Payroll does not include people that get a 1099, okay? Those are independent contractors. There is no such thing as a 1099 individual that is an employee, okay? So it's either employees that get a W-2 or independent contractors that get a 1099. So as long as you are paying on employees, interest on your building payments or your mortgage payments, utilities, rent or lease payments, then there's a good chance of the $10,000 being forgiven. Now, that being said, what has happened is the EIDL program still exists, and then we have another program that we're going to talk about. So if you have a building that you have collateral in or you have equity in, and you're having a cash flow problem right now, there is the possibility that you can apply for this EIDL. You will get contacted by a caseworker from the SBA. Once that happens, you can actually request more money than the $10,000 just as a traditional loan, a low interest loan, and that money can be used basically to help your business survive. So however you need it, you can use it. You just have to be prepared. If you're a nonprofit, you'll have to pay interest at 2.75%, and if you're a for-profit company, you'll have to pay interest at 3.75%. We can go to the next slide from here. So the next thing that that came out, and this actually came out a couple of weeks ago, and it's actually a little frustrating to me because I feel like it should have been implemented immediately, but the Families First Coronavirus Response Act, the FFCRA, you'll see that in the news a good bit, went into effect on April the 1st. So what this program does is, unlike the first credit that I told you about, this credit is 100% of what you pay for up to 80 hours of sick leave. So in order to qualify for this, there's two criteria mainly. One, your employee had to actually be sick, have symptoms, go get tests, or be under quarantine by mandate, by government mandate or something to that effect. And then also the parents whose children are out of school as a result of this fall into this program. So if your children are out of school and you have, no one has care options now, schools are out, preschools are closed, so, and either or qualifies. So if child care is closed or school is closed, that qualifies you for this Families First Act. And basically what happens is, if after April the 1st, if an employer continues to pay you up to 80 hours, the employer can basically request refunds of what they're paying you from the IRS. And again, if what they're paying in total payroll exceeds what the payroll tax deposits were, which should normally be the case, the IRS will refund you the difference. So you're actually able to not pay payroll taxes now, and then when you file your 941 return for the second quarter in July, when you take this credit, it will basically notify the IRS that you did not have to pay payroll taxes, and then you would get refunded for what you paid in salaries that were above the payroll taxes. So it's a really, really good credit. And like I said, it has to be COVID related, and your child, or your child being out of school, or government mandate closing your workplace. All of those qualify you for it. Now, there is a little bit, the Department of Labor is releasing a little bit more information on this. So there is the possibility, if, I don't know if any child care centers that are listening would have more than 50 employees, but for businesses that have 50 or more employees, it's looking like the Department of Labor is trying to do a mandatory sick leave pay. So if you are out sick, they're trying to require employers to pay it and then submit for the reimbursement. But there is a non-compliance period going on right now. I think it's from like March the 18th to April the 18th, where I think they're still trying to figure out the rules. They're not going to enforce this on anyone, but in the next week or so, there should be some more guidance on what employers are going to be required to pay their employees sick leave. So you may want to stay in tune with the departmentoflabor.gov to keep an eye on this, because this could be potentially very important to know. Like I said, it's a fully refundable credit on your Form 941. So when you submit that normal payroll return, it will have a line on it that will allow you to reduce what you pay in taxes and go into the negative, which will be a refund for you. So, and the IRS will send you the money within normally a week or two. We can go to the next slide from here. So this is kind of the big program that you're seeing on the news and every news site and all that good stuff, the Paycheck Protection Program. So the CARES Act was passed a week and a half ago or so, and this is what established really the two major cash flow programs, which is the Paycheck Protection Program and the unemployment program that we're going to talk about next. But basically, the Paycheck Protection Program is where employers who have payroll, and like I said, it's people that get a W-2, not 1099 contractors, but employers that have payroll can average their payroll over the last 12 months. Some banks are doing it over 2019, the year 2019. So you average your payroll, and in a simplified form, it's a little more complicated than this. It's taking us a couple, 2 or 3 hours per application to get these done, but on a simplified form, basically, it's relatively close to your average payroll on a monthly basis times 2.5%. You turn that application into the bank, And the banks are cutting these loans. These are not going through the SBA. So the banks are doing this. They close it like a normal loan, and then the SBA is securing the loan and providing the bank the money for the funding on the back end. So basically, you do an application. They have kind of told us that they want, your accountants, your CPAs to do the applications kind of for you, because there's some credits and things like that that need to be removed and all that stuff. But for the most part, you get with your accountant, your CPA, you do the application, you submit it to the bank, they'll go through, do their paperwork, ask you some questions, and then they provide you the money. So what has to happen with the PPP program is what I was explaining earlier. So the criteria for the most part on all of the funding that you get, either the EIDL or the PPP program, is related to payroll. They, for the most part, want you to use it to keep people working. So payroll qualifies rent, lease, interest on mortgages, and utilities. So if you stick with those, then what they're saying is, for the most part, you're likely to be eligible for forgiveness. Now, the trick to this, and what I've been trying to kind of figure out, and where I'm kind of struggling a little bit myself, is supposedly the guidance is saying that when you get the funding, the 2.5 times your average monthly payroll, when you get that funding, you're supposed to use it over the 8 weeks following the date of the loan to qualify for forgiveness. So you have to use it on payroll, all that good stuff that I said, after you get it for 8 weeks, and then that's what would qualify you for forgiveness. So I'm struggling with that a little bit, because I don't understand why they want to use it over 8 weeks when they're trying to encourage everyone to keep their employees on staff now. Now, they do have the credits that we talked about that will help with that, but again, there's more guidance that comes out on this every day, so we're continuing to watch it. But as of right now, that's what the rules are. Basically, 2.5 times your payroll, you get the money, you can use it on those particular items that I mentioned, or those categories, and it's possible that the money will be forgiven. Now, the good thing about the PPP program, which is why I try to push it more so than the EIDL program, is that whatever converts into a loan from this program will be at 1%, is what they're saying currently. So 1% is, far superior than 3.25 or 3.75%. So 1%, in my opinion, makes it very much worth doing the loan and going through the process, trying your best to meet the compliance. Because what will happen is say you don't 100% meet the compliance on the PPP program, not 100% of the loan or 100% of the funding is going to turn into a loan. It's going to be a proportion based on what you're in compliance with versus what you're not in compliance with. So it's almost a certainty that a portion, or even a significant portion, of the funding that you get through the PPP program is going to turn into a grant for you and not have to be repaid and not have to be claimed as taxable income. So it's a really good program from what we can see. We can go on to the next slide. So the other thing that the CARES Act did is it expanded the unemployment program. So some of you on the call, you may not have any W-2 employees, and you may not take a paycheck yourself. If you're just a sole proprietorship where you do not have payroll, you're not giving yourself a payroll check, then you're asking yourself, how do we apply here? So what the government did in the CARES Act is they expanded the unemployment program. So unemployment now, individuals that are sole props or independent contractors, people that you pay and you give a 1099 to, those individuals are eligible for unemployment. So you have two choices. Anyone that gets a 1099 or operates as an independent contractor or a sole proprietor, you can apply for the PPP program, okay? So you can apply based on what you normally would pay yourself and what your net income was on your 2019 tax return. So when you file your 2019 tax return, there's a business schedule on it for your child care center, and that net income makes you eligible for the PPP program. So the reason why I still prefer the PPP program is because you have a very significant chance of getting a large portion of the funding forgiven. Whereas in the unemployment program, so say your net income for 2019 was not that high, and your PPP program is only coming out to say $500, $1,000 or something like that. Cash flow wise, it's definitely much better for you to apply for unemployment because your normal traditional state unemployment wages will kick in, which was a couple $100 a week. And then depending on how Mississippi handles it, the government, the federal government, is supplementing the Mississippi unemployment program up to $600 per week. Now, that's in the state's control, so they may not go the full 600, or it may be that they only, pay you based on what your previous year's earnings were. But the unemployment program is a 39-week program, so you can potentially, if you're closed for quite a while, you could draw unemployment for a number of weeks to help you get through the period when you are closed. But that being said, if you do have a few people on staff and you are eligible for the PPP program, or you had a pretty decent income from your child care center, I would recommend that you go the PPP program route first, apply for that, and then once the 8-week period is done, you can still apply for unemployment and use the unemployment funds. So you can stack these programs on top of each other. So the first one we talked about, the employee retention credit, you can take that starting in March. You can take, and then you can take the Families First Act. You can take that credit starting in April. You apply for the PPP funds, and then those funds will be net of the credits, but still, if it exceeds it, you can get more money. It's a possibility you can get that money forgiven, and then once that's exhausted in 8 weeks, you can go on the unemployment program. So there's a way you can stack all this and kind of line it all up to where it can help you pretty significantly if you kind of play your cards right. So keep in mind, in the news, it's constantly saying that the federal government is supplementing $600. That doesn't necessarily mean that's what Mississippi is doing. It is doing more than the normal $200 or $210 or whatever it did. But I'm not for sure of the total amount. You'll have to go to mdes.ms.gov and apply. Now, I would, for all of you that are 1099 contractors and you don't have enough to go in the PPP program, I would go out there and apply immediately because the system is overloaded right now and it's taking them time to work through it, but more and more people are applying daily. So I would get your name in there as soon as possible so that they can reach out to you and contact, and get you set up and all of that good stuff. If you receive a 1099 from your child care center, and if you pay your laborers, your labor as independent contractors, they qualify as well. And since they are independent contractors, it does not affect your employer rate that you're taxed on for the unemployment program. It would possibly affect your rate for your W-2 employees, but there's not enough certainty. We don't know that yet. But like I said, in closing, before we go to Q&A, the goal of all of these programs is not to just pick one and use it. The goal is to really use all of them to their potential and as much as they possibly can help you. The problem is it's really confusing. So you need to talk to your accountants, your CPAs, people that are near you, that you trust, and get information from them and have them help you through this, because there's a way to lessen the impact that this is having really on you. Ms. Carol was telling me earlier before we started the webinar that she just read that over 800 child care centers are closed in the state of Mississippi now. So this this crisis is very significant. So, so for all of you, that are affected by this, one of these programs will help you. So not a single one of you on this call are likely going to be left out of any of these programs. It is likely that all of you will qualify for something in some way, shape, or form. So I'll turn it back over to you, Ms. Carroll, if you want to say anything and start the Q&A and however you want to do that.
All right, thank you, Ty. Yes, we have quite a number of questions. The first one, can your business apply for the EID loan and the PPP?
You can. So you can apply for both. What happens is when you're going through the PPP program, the application or the bank will ask you if you were awarded an EIDL loan. But since no one's really been awarded them yet, what's going to happen is at the end, the PPP loan will absorb the EIDL loan. So yes, you can go out, get the $10,000 now, and then when you apply for the PPP program, notify the bank that you're working with that you did apply for the $10,000. That way, they can credit you for that in the PPP program. And because what will happen is if you wind up getting both, they will just turn it into a loan that you'll have to repay. So, but yes, the short answer is you can apply for both the EIDL and the PPP program.
The next question is, what if you are a church and a nonprofit?
So, so churches, okay. So I have to give a little context here. So a church doesn't necessarily have to be a 501c3. Okay, so by default, a church is a 501c3 without actually having to register with the IRS. So a church is considered a nonprofit as far as the IRS is concerned, even though you have not been awarded or you may not have been awarded an exemption, because by default, just the formation of a church and the structure of a church awards them nonprofit status without a formal award or exemption letter from the IRS. So if you're a church, you are a nonprofit and you do qualify for the nonprofit criteria, the lower interest rates. If you have payroll, you qualify in the payroll programs. If you have independent contractors, your independent contractors apply, they qualify in the unemployment program. And you qualify as a legal business entity in the EIDL program. So it's really no different. You would just follow as a nonprofit, even regardless of whether or not you're a registered exempt 501c3 organization with the IRS or not.
All right. Do the leave provision, in the leave provisions, is 80 hours of paid sick leave per employee?
Yes, it's 80 hours per employee, so you can pay them technically up to 2 weeks per employee. In the Families First Act would start after April the 1st. So you can pay them for 80 hours, and then in your second quarter 941 form, you will take a credit on those wages that you paid. And then the employee retention starts in March, and that's the 50% credit that you would get. So, and it's per employee. So the $10,000 in wages per employee on the employee retention credit, and the up to 80 hours in the Families First Act, 80 hours of sick leave credit per employee.
All right, here's another question. When you state average monthly payroll, do you include the matching Social Security and Medicare?
So the calculation, let's see here. So the calculation, it's a little technical, but basically from the top to the bottom is your additions in payroll is typically just gross wages plus your unemployment tax. So it's gross wages plus unemployment tax, any owner's compensation that you would pay yourself, and then and that's pretty much it that goes in. So the employer match on Social Security and Medicare and all that good stuff does not get counted into the criteria to determine wages. So it's really, there's an addition section and a subtraction, or a reduction section, I guess you would call it. But traditionally what goes in the additions would be gross wages, the cost of your unemployment to your employees, and any type of owner's compensation that you would have. And you would not include the employer's portion of payroll taxes in the additions.
Can you do these grants or loans simultaneously or not?
Yes. So you can basically start the EIDL now and contact your bank now and start the PPP program. What will happen is once you do the EIDL, you'll get a confirmation. You'll get an SBA loan number. Just make sure you print all that information out and just send it over to the bank. So when you do the EIDL program, they don't email you a confirmation or anything like that. You can start that now, print out that loan number, start the PPP program, and send that information over to the bank and say, hey, we applied for this. And what most banks will probably do is if you come out to less than $10,000 on your PPP program, they're just going to tell you that you have to wait for the EIDL funds. If you come out to more than $10,000 on the PPP program, they will normally issue you the difference, assuming that they can get all the paperwork. The hard part about the PPP program is preparing the calculations and getting the supporting documentation to the banks. So once you meet that criteria, you can do both at the same exact time.
All right. How are the utilities included if it calls for calculations of payroll?
So the calculation to determine how much money you get is based on 2.5 times your average monthly payroll. So to determine how much you get is based on payroll, what you can use the money for. And the trick is you have to use the money 8 weeks after you get it. And what you can use it for is, because think about it, 8 weeks is 2 months. So if you're getting 2.5 times your monthly payroll, they're giving you extra money to use on other things. So for the 8 weeks after you get the money, you cover 2 months of payroll and you cover utilities, lease, mortgage on your mortgage interest, things like that. And that's what the program is designed for. It's designed to give you a little bit of extra money to basically cover all of those costs for the 8 weeks. And from what I'm reading, you're supposed to use all of the funding in that 8-week period.
What happens if employees have applied for unemployment and the business receives the Payroll Protection Program loan?
So this actually, I spent a couple of hours researching just yesterday because it's a little bit in the gray and we're not 100% certain. So right now, the criteria for the Paycheck Protection Loan Program is that you meet the funding requirement after you receive it. So technically, it is possible that if employees applied for unemployment and you did, and then of course you're not taking the credits between March the 12th and now and all that good stuff. So your employees apply for unemployment. From what it's looking like, that's okay. They can apply for unemployment, but what has to happen is when you get the Paycheck Protection Program money, you're supposed to make it good. You're supposed to bring them back to your full level of payroll and pay them so that you can qualify for the forgiveness. Now, I've been researching to see if there's going to be a look-back period that will include, because the window that's used to determine the Paycheck Protection funds it starts on February the 15th. So it's February the 15th through June the 30th is kind of the window for measurement. that you can opt for if you were not in business for the full calendar year of 2019. So what I do not know is if there's going to be a look-back period that says that you had to be fully staffed with no one drawing unemployment starting from February the 15th. And I'm continually researching and trying to get that answer. So far, it is leaning towards that as long as you do the 8 weeks in compliance. So if you think about it, the beginning of May through June will be your 8 weeks. If you're in compliance with fully funded payroll, everyone that was typically that needed to be retained as an employee is back on payroll and getting their normal payroll check, then as of right now, it's looking like you would still qualify for the forgiveness.
All right. Here's another question. My financial institution is Wells Fargo. Wells Fargo closed application acceptance April the 5th. What should I do?
So the program is running through the SBA 7A program, which basically means that almost every bank is doing this. So depending on where you're at, if you're near a Hancock Bank or a community bank, the First Bank, People's Bank, I mean, pretty much most semi-decent, a lot of credit unions are not doing it, but most banks that are of a decent size that have a couple of branches, Regions Bank, all of them are doing the program. So my advice to you would be to introduce yourself to the business banker and maybe make a relationship with them and do an application with them because they can do it. Now the thing is it is at the bank's discretion, so they will ask for a certain amount of source documents that that will help them warrant and justify giving you the loan. So you will need to be able to provide all of that. But my advice to you, if Wells Fargo has closed their application process, is I would go with a Hancock Bank or another regional bank or someone around you to do the application because I wouldn't miss out on the funding. I think at the 1%, irregardless of whether or not you're repaying the money or not, I would still go after the program.
Here's another question. After you fill out the form for the $10,000, how do you know if you get it or not?
You do not until the SBA contacts you. So they will have no contact with you whatsoever. So you're going to submit it. You're going to get a confirmation page that it was submitted. Once you actually hit the submit button, it will give you your SBA number. You will not know in any way, shape, or form, unfortunately, because they're too overloaded to kind of give you that answer. And if you call them, they're going to say, wait for us to call you. And unfortunately, that's the only way you're going to know. You're going to have to basically wait it out. But you do want to notify the bank that you're working with for the PPP program, because at the end of the day, it will be the bank's job to determine whether or not you got all of the money or not. So if you turn around and get denied for the EIDL, if the bank qualified you on your PPP application with a credit of the $10,000, then they can go redo the loan documentation and make it good.
All right. Here's another question. We use an accountant to do payroll and 941. Our employees receive W-2s. How should I go about getting the totals that the Paycheck Protection Program application requests, and what supporting documents should I expect to provide?
So I would get with your accountant. I would think that they would offer that as a service to you. I mean, every one of our clients, we are working with them to actually complete the applications. So what they need to do is provide you payroll summaries or recaps of the period that the bank is asking for. So for the most part, there's two kind of prevailing methodologies, which one is calendar year 2019. So you would need to ask your accountant for payroll summaries or monthly reports for the calendar year 2019, or the most recent 12 months. So if your bank uses the most recent 12 months, you would need to ask for that. So the calculation is working based on months. So what you need is a payroll recap by month to do the calculation. Every bank that we're working with, and we're probably up to maybe about 20 different banks now, or I should say branches, I guess, because we're working with some banks with 5 different branches, but every bank that we're working with has a criteria sheet. So if you contact your bank, copy your accountant on the email and say, will you please send the criteria for the Paycheck Protection Program, the bank will send you what they need, which normally includes your 941s for calendar year 19, your W-2s, your payroll summaries by month, and then in some cases your average payroll by employee, and you will fill out a couple of applications. There's a supplemental application that they're doing now as well, but the bank will lay all of that out for you when you contact them. That way yourself and your accountant is working with what they need, because every bank that we're working with is requesting something slightly different. So it's impossible to say exactly what each bank will want. But at this point, most banks are having internal meetings to lay out the guidelines for how they're going to approve the loans. So your banker should be able to provide you with a list of criteria and what they need.
All right, here's a question. Can you do the unemployment option first and then use the payment protection program once you reopen the center?
It's looking like, yes, that you can do the unemployment option, and then you can apply. Once you apply for the Paycheck Protection Program, and once you get it, your staff comes back off of unemployment and you go fully staffed. It looks like you can do it in that order, yes.
How do these programs work if you have more than one business with separate tax ID numbers?
Each business can apply. So you could, if say you have real estate or a building that you have in a property holding company, like an LLC owns your building, and or your building is in an LLC, and your child care operations are in a separate LLC or a corporation. Each entity can apply. So if you have, or say you have 2 different child care centers that have 2 different business names and 2 different tax ID numbers, each child care center can apply separately. So the tricky part there is that during the application process, you have to disclose what your additional ownership is. So you make sure that you do that. And you don't want to commingle your owner pay. So what you're paying yourself from one child care center needs to be disclosed in that application, and then what you're paying yourself from the other needs to be disclosed. So you don't want to commingle those or get them confused or anything to that effect. It needs to be based on history. Historically, what did you do in each business to include in your application? But you can apply for either or both. The trick at the end of the day is that you cannot apply from multiple entities or multiple programs for the same exact purpose. So that's why they're crediting the $10,000 through the PPP program, because it's a given that if you get the $10,000, you're going to use it on the criteria. So when you get the PPP funds, they're going to withhold that money out because you cannot use it on the same exact thing.
I've had a couple of questions about unemployment. If the entity has not paid unemployment tax into the state, are the employees still eligible to apply for and receive unemployment benefits?
Yes, but you will likely have had to have filed a tax return to prove that you had self-employment income. So if you're a 1099 contractor and you work for a child care center and you get a 1099, which I will tell all of you child care centers out there that you're not supposed to do that. But anyway, if you get a 1099 from a child care center, or say you're an Uber driver and you filed for Uber, on your tax return as an independent contractor, it doesn't matter if you paid or the child care center paid unemployment on you. The pandemic fund that was created through the CARES Act funds independent contractors who have never paid unemployment. It's basically, the point of it is not that you're collecting unemployment based on what was paid in the pandemic fund. The point of it is mainly a stimulus for independent contractors to have a resource to get cash flow. So it does not relate to whether or not someone paid taxes in on you or not. Now, that being said, when you apply to MDES, you will either get a message saying that you're rejected or that you don't qualify or something to that effect, because the traditional route means that you had to have someone file unemployment on you. And the state's programs and websites have not been updated to account for this new funding and probably never will be. What they're doing is you put in the application and they're going to have to reach out to you to get the criteria that they need to establish you through the program. So don't be discouraged in the beginning, and don't think that you're going to get answers immediately. The state unemployment program is completely overwhelmed and bogged down with this process. So get your application in and try to make a phone call or two. You can email them to check on the status of it. I believe if you look on the website, mdes.ms.gov, there's a special COVID email address. I think it's covid19@mdes.ms.gov. You can email them, and you're just going to have to wait on a reply to try to get yourself established in the program. But you do qualify irregardless, assuming that you have some proof and some record of filing that you were an independent contractor in the past. You will qualify.
Do you know when the unemployment rate benefit is going to go up in Mississippi?
I do not know. It's based on the legislature and the the governor and the unemployment program and all that stuff, and I do not know that.
All right. If you had to send your employees for unemployment and you return back to work at the end of April, can you still qualify to pay wages once they return back and no longer need the unemployment? And is the loan still forgivable?
It's looking like yes, because if you had to let them go for cash flow purposes and they collected unemployment, that unemployment is looking like it is not going to penalize you. What I do not know for certain is whether or not the 100% forgiveness on the loan will be granted, because the Paycheck Protection Program says that the intention of the program is to continue payroll without laying people off, but the guidance itself from the SBA says that the measurement period is the 8 weeks after you get the funding. So it is looking like, for cash flow purposes, if you are not able to pay people and you send them to collect unemployment, as long as you get them off unemployment and back on payroll, you will still qualify likely for forgiveness.
Do you know when we'll start to see these funds released?
Well, it was supposed to be yesterday, but and actually I do have a client or a banker that I work with where funds were starting to be released yesterday through the Paycheck Protection Program. I have not had anyone receive any funding from the EIDL process yet. And then the other programs are self-funded, so basically your funding comes through you just not paying your payroll taxes. But the PPP program did start funding. I did have one funded yesterday. The EIDL, it is supposed to be this week. It was supposed to be within 3 to 4 days that you would get the money, but like I said, so far no one has gotten it. So it is supposed to be very soon, and the PPP programs are supposed to be working very soon. By the time your completed application is accepted on the bank level and goes to QA in the loan division at your bank, that whole process is supposed to turn around within a few days.
All right. I am self-employed and applied for unemployment, but it's not showing any funds are available on my claim. Does that mean I didn't get approved? And if so, is there something else I can or need to do?
It does not mean that you did not get approved. What you have to do is reach out to the unemployment office, which you're not going to get any of them on the phone right now, but they're working through the process, and what they're going to do, I'm trying to get my web browser up real quick and see if I can find that email, but they're working through the process and they should reach out to you. But my advice to you would be to include your name and send an email to the covid19@mdes.ms.gov and basically ask your question because, you know, so that you can at least get a response. That's unfortunately the only way you're going to know at this point what the state is doing with self-employed or sole proprietorships or independent contractors.
Here's a question. I had to lay staff off on March 27th. I applied for the Payroll Protection Program on April the 5th with only 10 employees and not 15. I only needed to retain 10 at the time. In order for me to continue with the Payroll Protection Plan, do I need to bring back those other 5 employees?
So that's a really good question. So the paperwork, the way the act is supposedly going to work is it is going to look back at a previous period. So it is going to compare what you did for the second quarter of 2020 to the second quarter of 2019. So if you are retaining 10, but in the second quarter of 2019, you had an average of 15, it depends on how much of a, you know, wage dollar-wise of a drop that's going to be. The objective is your average for the second quarter has to be greater than 75% of what it was for the second quarter of 2019 in order to qualify. So if you mark that you're retaining 10 and you meet the wage requirement and your number does not drop, it's looking like you're going to be okay. Initially, the program was supposed to be that it was the number of employees for the prior period and the dollar amount for the prior period, and there was not supposed to be any drop. But it looks like in the supplemental information that we just got yesterday, it looks like they're allowing you to apply based on how many you retain, and your look back will still happen, but you just basically need to calculate what your payroll was for the second quarter of 2019 and make sure that you're 75% or greater for what you come out for your payroll for the second quarter of 2020.
What do you need to tell your CPA that you need to take to the bank?
Your Form 941s, your W-2s, if you have like a self-employment form like a K-1, payroll summaries by month, average payroll by employee, and your applications.
If you haven't completed your 2019 taxes, will they use your 2018 taxes?
For the PPP program, it is not required that you have completed your 2019 taxes unless you are self-employed. So if you're an independent contractor or you're self-employed or you're sole proprietorship and you file a Schedule C, you will likely need your 2019 tax return in order to qualify for the PPP program. If you have employees where you have on-record payroll forms like 941s and W-2s, you will not be forced to complete your 2019 tax return before you apply. The thing where the 2018 is coming into play is the stimulus checks, which we've not talked about in here because it's not really small business related, but
right.
The stimulus checks that are giving you the $1,200
right.
and the $500 per child, that will it'll roll back to your 2019 to your 2018 if you have not filed your 2019.
Do these loans depend on your credit rating?
They do not, actually. So that's kind of the thing with this SBA program, is that the CARES Act created a temporary relief program that basically nullifies all of the eligibility criteria. So they are basically doing, and it's nullifying the fees as well. The banks get a fee, and if a CPA helps you, like the bank gets a percentage as a fee to do the program, but the SBA fees and all of that are waived, the eligibility criteria and all that are waived, and then the bank fee that goes to the percentage of whatever bank fee, the bank gets for a fee for doing the program. If a third party, like a CPA or an attorney or somebody like that, helps the bank, then the bank has to, or is allowed to give the third party a cut of the fee. So, and that fee is not supposed to be reduced from your loan amount. So it's supposed to be a completely funded program to you with no penalty and with most of the eligibility criteria being eliminated.
Can daycare owners apply for unemployment?
Yes. If as long as you filed as a business owner, you can, and you have some documentation to prove that, you have a tax return, you can file for unemployment.
Can you pay your payroll taxes out of the Payroll Protection Program funds?
So it specifically states in the Payroll Protection Program that your employer taxes do not count. So so it will not count basically in what you're paying, and it does not count in your calculation. So if a bank uses your previous 12 months to calculate your average payroll, they have to back out what the withholding tax and all that stuff is. They have to back that out of the calculation because taxes are not calculated in the program in any way, shape, or form starting on February the 15th.
I had an employee who quit and she's filed for unemployment. Will this affect me?
Possibly. So what needs to happen there is if the employee quit, you should get a form from the Department of Employment Security where you have the chance to respond that the employee resigned and that you were, the key terms here are that you would have continued employment had she not resigned or had that employee not resigned. So you respond to that, and then that basically, and then you keep that record, and then chances are you will be able to use that to show. Now, that being said, your objective once you get the PPP money is still to operate at above 75% and at the level of capacity that you normally would operate at. So if you're able to replace that individual, you would still want to do it. But from what I'm reading, you're not supposed to be penalized for people that are terminating their employment that is beyond your control.
What if you decrease the number of employees in the second quarter of 2020 from the second quarter in 2019?
Then you have a better chance of getting the forgiveness, basically.
If you decreased?
Oh, if you decreased employees?
Yeah.
Okay, so I thought you said if you increased. So if you decreased your number of employees, so when you fill out your application for the PPP program, it's going to ask you how many employees you intend to retain. So you will want to document, compared to the quarter before, you will want to document why you're not retaining that level of employment. And that will come into play on whether or not you're forgiven or not.
When it asks for gross revenues for 12 months, can this be found on the tax form?
Yes, depending on what you file. If you are a single owner business and you file on your personal return, there's a schedule called a Schedule C on your tax return where it will tell you the gross receipts. And then the next line that they ask you for is cost of goods sold. So for a child care center, a cost of goods sold would be basically the cost that it takes you to provide your service. So you know, you can include like food costs and things like that in there. You know, that doesn't have to be like an exact science or anything. So the gross receipts are on your tax return. There is a cost of goods sold section on your tax return. So if you have filed that for 2019, you'll have that information. If there's nothing in your cost of goods sold section, which is what happens in a lot of cases that we see, you just have to estimate it, and it's basically things that you had to pay for in order to offer your service. So things that are consumable in nature, like food or workbooks. So like you buy workbooks for the children to work on, those would be cost of goods sold for a child care center.
I know you've already spoken to this, Ty, but I'm still getting a number of questions from child care centers that for various reasons, they might be a church or a nonprofit or whatever, the employer has not paid unemployment taxes. And the question keeps coming in as to whether or not those employees are still able to file for unemployment.
Yes, it is the intention of the pandemic fund that was awarded in the CARES Act is to pay independent contractors, meaning if you've never been in unemployment, if your employer is not paying unemployment, if you don't get a paycheck, because what happens is if you get a 1099 from a child care center, and we don't want to do that anymore, but if you get a 1099 from a child care center for working there, all right, you take that 1099, you file it on your tax return, all right, you receive a 1099 from the child care center, you file your tax return, there's a net self-employment on that schedule that you file on your tax return. That is that's what tells the unemployment agency that you're a independent contractor, you're a self-employed business. You can use that and you can apply for unemployment. And according to the Act, you are eligible for unemployment. The money is there. It's just, we just have to what we're waiting on is for the state of Mississippi to basically get moving with awarding the funding.
All right. Ty, it's a little after 2. I don't know what your availability is. I have a few more questions. Are you okay answering a few more?
Yeah, we can do a few more. And just for, I had a chance to look it up. It's not COVID-19. It's the email address for unemployment is cv19@mdes.ms.gov. So cv19@mdes.ms.gov. And that's where you want to send your questions. Get your application in, and then give it a few days, and then send an email and let them know that you applied and what you need to do next.
All right. And also, just to let everyone know, these links we will put up on our website and send a recording of this along with a copy of the slides to everyone who's participated in the webinar today. So everybody will get that information. Here's a question. I'm a childcare business owner. I went to Regions Bank with the application. When we did the application, it wouldn't allow me to include the employee wages, rent, utilities, insurance. The application only let me put in payroll wages. What do I do?
That is correct. You are only applying based on payroll wages. The confusing part is your application is based on payroll. So when you applied, Regions is correct that you only are putting in payroll. What the government is allowing you to do is that when you actually get the money, you can choose to use it on payroll, utilities. Now, keep in mind, you're not going to pay, if you apply for $20,000, you're not going to pay $20,000 in utilities. It's really what your actual utility bill will be for the 2 months following the date that you get the funding. So Regions is correct. You put your payroll in to get the loan, and then when the money comes in, you're allowed to pay utility bills, interest on your mortgage, rent, lease, and payroll.
What's the time frame on the $10,000 advance?
So far, it's looking like at least a week.
All right. If you have a business that just opened at the beginning of March, can you apply?
You cannot, from the looks of it. You had to be in business and viable before February the 15th in order to apply. So if you just opened the business in March, probably the thing that you would have going for you would be the payroll credits that you would be eligible for things that you were paying for in late March and February to help you out. But the PPP program and the EIDL program, you had to be in business earlier than that.
Are part-time employees eligible to receive unemployment?
That is a good question. So my understanding is that they are eligible in this program. So because you're also eligible if you're cut from full-time to part-time, you're eligible. So you can supplement the difference in your pay. So if you are a 40-hour a week, you get cut to 20 hours per week, you can file for unemployment on the difference and basically recoup your cash flow. And the unemployment funds, the temporary funds, are also supposed to be available to part-time people because if you're not an independent contractor, you're not qualifying for PPP and EIDL and all that kind of stuff. So really what's going for you at that point is the unemployment program. So, and the temporary unemployment program is supposed to be covering, that's kind of the whole point of that major act that they produced is supposed to try to cover everyone, which includes independent contractors and and part-time employees.
All right. Just one second. I've had a number of questions about what the difference for a business would be if the business gives 1099s as opposed to W-2s.
So it would be a huge difference on the PPP program. So, so technically, for the most part, if someone, especially in child care centers, works in your facility with your equipment, your furniture, your customers, your materials, your everything, the intention of this is that you're supposed to be able to continue paying those people. But if they are on a 1099, which they should not be based on the employer-employee relationship rules, if they're not on a W-2 and they're on a 1099, it disqualifies you from applying for the PPP program. So it puts you kind of in a situation where you can apply for yourself, but you cannot apply for your laborers, your independent contractors. So it puts all of them in a position where they have to either apply for the PPP program themselves, which they could do by having a 2019 tax return and some record of what they paid themselves. Because remember, they're paying themselves. You're technically paying them as a non-employee compensation. They are paying themselves, which means they're covering their own payroll taxes instead of you paying a portion of their payroll taxes. But what the PPP program does is it eliminates all of them. So if you are staffed with nothing but independent contractors, the only thing that you can apply for in the PPP program is your compensation. They all have to go apply for their own PPP program or the unemployment program. And as you can hear with all the questions, the unemployment program is not going so well so far. I think it's going to get there. I think it's just going to take us a couple of weeks. But what we're seeing is that most independent contractors that just get one 1099 at the end of the year, and by the time they put their expenses and everything on it, if they have any, it's not really worth it for them to file for the PPP program. If they can file for unemployment and get, so much money for so many weeks, that far exceeds what they would get on the PPP program. So by treating them as 1099 independent contractors instead of employees, it's really kind of hurting yourself and hurting, and hurting them as well from the cash flow perspective. But like I said, they are eligible for unemployment. They just have to wait for the system to catch up.
All right. Could you repeat the email address to ask unemployment questions?
Yes, it's CV19 at MD, as in Delta, MDES dot MS dot GOV.
I have estimated taxes that I have paid. Will that suffice along with my 941 and W-2s?
Yes, normally, I don't think they'll go to the extent of you having to provide that documentation, but if you're paying estimated taxes, it's based on a tax filing. So normally you would have enough records to prove that you're eligible. The estimated tax payment will not tell the bank how much you qualify for, so I wouldn't take that route, but you can provide it as a means of showing the viability of you getting the program and qualifying for the program.
I don't have 10 employees. Will that affect anything?
No, not that I can think of.
And what is the 2.5 calculation? The question is how many months is the 2.5 multiplied by, but I think that's, anyway, can you explain the 2.5 calculation?
Yes, so if you take your payroll for the period that your bank is requesting, so it's either calendar year 19 or the last 12 months, so you have 12 months of payroll. So if your total payroll is whatever, 120,000, or whatever, you divide that by 12, so that gives you your, average monthly payroll. So you divide whatever your total payroll is for the year by 12. That's your average monthly payroll. That number, with a few other calculations with it, times 2.5% is the number they're looking for. I'm sorry, times 2.5, not 2.5%. It's that average monthly payroll times 2.5 is the number that they're looking for.
Okay. If you are the owner and your pay is not reported on W-2 and the owner receives Schedule K-1 or a 1099, does that disqualify the business for the Payroll Protection Program?
No. So if you're an owner and you get a K-1, you should not also be getting a 1099 for one, but that has nothing to do with it. That's just a note for your accountant. But anyway. If you're an owner and you get a K-1, you would have a business or an S corporation tax return or something like that. That company, the company would basically still use like your K-1, because your K-1 is no different than it's showing what you're eligible for as far as net income goes. So you would basically turn your K-1 in, your tax return in. You would do kind of a schedule by month of how much you paid yourself monthly times 2.5%, and then you would turn that in. So it's a little tricky on businesses like that because the bank could possibly just do it based on your K-1 divided by 12 times 2.5, or they could do it based on what you actually paid yourself. My advice would be to do it based on what you paid yourself, because if you have debt payments or things to that effect, then your K-1 net income will be higher because debt payments are not deductible. So your K-1 income would be higher than what you actually paid yourself. So my advice to you would be to also do a schedule on what you paid yourself. Turn that into the bank and use that for your multiple. So you take what you paid yourself divided by 12 for the year, divided by 12, and then multiply that times 2.5. But you will need to turn in your K-1 to go with your PPP. application.
I have not filed 2019 taxes. Do I need to file taxes before I apply for these programs?
You do not. If you're applying for the PPP program, if you have payroll. So and you're not technically required to do it. If your bank can get a level of comfort with you without you filing your 2019, that's acceptable, but I have not run into a bank yet. I've not run across a bank yet that was willing to accept a PPP application for a sole proprietorship that does not have their 2019 tax return filed or at least prepared. It may not necessarily be filed, but at least prepared so that they can see it. Because normally the 2019 tax return plus a profit and loss statement would be what they would use to calculate your self-employment income. Now, if you have payroll where you're filing 941s and W-2s, you absolutely do not need to do your 2019 tax return. You will have all the records you need to do it.
I have had a couple of questions. What if I'm in transition from 1099s to W-2s?
So if you were in transition, say before January, a lot of banks are allowing the use for the PPP program to be an average of January, February, and March payroll. So if you transitioned in late 2019 or say January the 1st, you can likely convince the bank to let you take the loan based on payroll. Because again, the criteria will be for you to meet the obligations 8 weeks after you get the funding. So compared to the prior period, your payroll would be higher, and compared to the average, you would have the multiple and the calculation you need in order to get the funding. So you should meet the criteria for forgiveness if you transitioned soon enough. If you just did it in March, unfortunately, that's probably not going to help you, or April. But if you did it before January or as of January the 1st, I think you can probably make that work for you.
I'm still paying child care center workers. Am I eligible for these programs?
Yes, definitely eligible for the programs. You're eligible for the PPP program. You're eligible for the Families First credit. So you're probably eligible for almost all of them if you're still paying your workers.
All right. We have some questions that we'll forward to you, Ty, for answers to provide in writing, and we will put those up on our website when we post the recording and the slides. And the slides include some website addresses, and we will give additional website addresses for people where they can go to get additional information. Ty, we want to thank you so much for being on this webinar today. It's been super helpful to have you walk us through all of these programs and give us all this information.
You're very welcome. I appreciate you having me.
All right. Thank everyone for participating, and we want to remind everyone that we will have a webinar on Thursday. And Thursday at 1 o'clock, we're going to have a representative from the Mississippi Office of Child Nutrition. The director of the Child and Adult Care Food Program will be with us to give an overview of waivers the state of Mississippi has received and to answer all of your questions about the Child Care Food Program as it's operating during this coronavirus emergency. Thanks so much for participating, and we'll see you Thursday afternoon. Goodbye.